Hello everyone, welcome back to Mindful Investing. It's time for our monthly full portfolio update. As of now, my portfolio stands at around $219,000 with a 9% gain year to date. For comparison, the Nasdaq is down 0.5% while the S&P 500 is down 1% in 2025 so far. I currently hold 31 stocks, a mix of high growth names, reliable dividend payers and a few strategic ETFs. Now, even though Robinhood shows I'm only up 9%, based on the capital I've invested, I'm actually up over 15% year to date. That difference is due to the swing trades I've been executing and the way I've managed my cash position. I've invested roughly $113,000 and I still have another $94,000 ready to deploy. My realized gains in 2025 so far are $3,679 and unrealized gains are $17,500. I've been strategically buying at key support levels, trimming a few positions and even adding some exciting new companies. In today's video, I'll walk you through a full portfolio breakdown, the stocks I'm currently buying and selling, my 1 year and 5 year stock predictions and price targets. Stick around. This will be a deep dive into my investment strategy and how I plan to navigate the markets moving forward. Let's jump right in. Before we begin, just a quick note, all stock predictions are based on my personal research and analysis. I've also been posting dedicated videos as part of my stock prediction series where I go deeper into the fundamentals and projections. Be sure to check out that playlist on my channel. Alright, let's start with my high growth stocks, which makes up a significant portion of my portfolio. First up, we'll start with Broadcom, ticker symbol AVGO. I currently hold 111 shares of Broadcom with an average price of $180.59 and I'm currently up 33%, which is $6,600. Broadcom is reporting earnings next week and I'm expecting it to beat earnings and go towards $300. My next buy zone would be at $185 because it will be filling the gap and I see Broadcom growing by 19% in the next 1 year and 138% over next 5 years. I'm confident this stock will be a money machine for the next 5 years for me. Now let's talk about AMD. I currently hold 20 shares with an average price of $106. Right now the stock is trading around $110, which means I'm up close to 3% on my position. I did update the EPS growth rate of AMD after recent earnings from 25.7% to 24.5%, and now the 1 year price target for AMD is a 24% upside, and in the next 5 years I see it growing over 188% based on AI demand and semiconductor growth. I have my buy zones set at $96 and $74, and if we see a pullback, I'll be adding more to my position. Alright, the next one is Amazon. I currently hold 20 shares with an average price of $192.76. Right now, Amazon is trading around $204, which means I'm up over 5.7%. I see Amazon growing with a potential 21% gain in 1 year, and in the next 5 years, I expect it to grow over 164% as AWS and e-commerce continue to dominate. I have my buy zones for Amazon at $181 and $174, where I'll be adding more shares into my portfolio. And the next one is Google. I currently hold 33 shares with an average price of $163.59, and right now my position is up over 5%. Recently, Google announced a lot of new features which removed all the concerns investors had over their search dominance, losing for LLMs like ChatGPT, Grok, etc. My 1 year price target is a 14% upside, and in 5 years, I expect 93% growth. Google isn't as undervalued as some other stocks, so I'll be adding only if it drops to my buy zones at $148 and $136. Moving on to Arista Networks, I own 20 shares with an average price of $83.65 and I'm up close to 2.8% on this position. While I see a 15% upside in the next 1 year and 99% gain over 5 years, the upside isn't strong as some of my other holdings. I'm waiting for this to move above $100 to sell off my position. Currently, sentiment on this company is bearish, so we either need to wait a little more to see big gains or take profits right here. Alright, next up is Nvidia. I currently hold 34 shares with an average price of $123.25, and right now the stock is around $134. I would like to buy Nvidia below $100 and my 1 year price target is 28% growth, while over 5 years I see it gaining 246%. With AI and data center demand skyrocketing, I believe Nvidia will remain a strong winner in my portfolio. Now let's talk about Microsoft. I currently hold 10 shares with an average price of $386, and right now Microsoft is trading around $458. I recently sold 10 shares of Microsoft for a $600 profit. I was expecting some pullback on this because Microsoft is way overextended from its moving averages. I see Microsoft gaining 15% in the next year and 99% over 5 years. But since the upside isn't huge, I won't be adding aggressively unless it drops below $400. Next up is Lam Research, ticker symbol LRCX. I currently hold 109 shares with an average price of $74.75, and I'm considering adding more if it drops below $67 or lower. Based on my analysis, the stock has an upside potential of 16% in 1 year and 114% over the next 5 years. And the next one in my portfolio is Vertiv Holdings. I currently own 101 shares at an average price of $84.51, and I'm up over 26% on this. If the price pulls back to $72, I plan to buy more. The stock presents a highly attractive upside of 27% in 1 year and 232% in 5 years. And the good thing about having 100 or more shares is I'm selling covered calls on Broadcom, Vertiv Holdings and Lam Research to make passive income every week. And the next one in my portfolio is Chipotle, ticker symbol CMG. I currently hold 58 shares with an average price of $55.68, and I'm currently down over 10%. I'm planning to add more if the price drops below $45. The projected upside is 17% in 1 year and 117% in 5 years. Food industry has been under pressure lately, but I see this as an accumulation period and I want to accumulate 100 shares on CMG for long term. Lastly, I have the Trade Desk, ticker symbol TTD, where I currently hold 32 shares with an average price of $65.45, and I'm currently up over 13% on this. This has a similar pattern like Arista Networks. It has fallen more than 50% from its recent highs. My key buy level is $51. The upside potential is 23% in 1 year and 182% in 5 years, making this a long-term potential opportunity. Now let's walk through the dividend stocks currently in my portfolio, which provides stability and passive income. So far this year, I've earned $744 in dividend income, and that's just passive cash flow coming in while I hold strong companies. Alright, the first dividend stock in my portfolio is Realty Income, ticker symbol O. I currently have 51 shares with an average price of $54.80. This stock pays a 5.59% dividend yield and is one of my favorite monthly income stocks. My buy zones are $52 and $51. And the next one is Coca-Cola. I currently have 50 shares with an average price of $63, and my position is up over 14%, and I'm watching for a pullback before adding more shares of this. And the next one is LTC Properties. I currently have 71 shares with an average price of $33.98 with a 6.4% dividend yield. My current buy zones for this are $33, $31.3 and $30. The next one is Johnson & Johnson. I currently have 10 shares of Johnson & Johnson at an average price of $142, and my position is up close to 9%. Recently, all the healthcare industry is under pressure, and since J&J is still under 200-day EMA, it's a good dividend stock to own for long term. It currently has close to 3.2% yield, and I'll add only if it dips below $140 to average my stocks. And the next one I have is Target. I currently have 16 shares with an average price of $117, currently down over 20%. My buy zones for Target are $89 and $82. I'm not seeing much upside here, only 5% and 25% in 1 and 5 years. So we'll sell this up in few quarters. It also pays a good dividend yield of 4.7%, which is great. Another way to look at Target is its current PE ratio, which is currently at 10. It is very low, and I believe long-term investors will pitch in to buy at these levels. And the next one is CSX. This is a railroad company. It isn't a flashy pick, but it provides stability. I currently own 47 shares with an average price of $33 and I'm down 4.7% on this. I don't expect massive gains on this, but railroad stocks hold steady in bear markets while still paying dividends. It has a dividend yield of 1.58%. That wraps up all the dividend stocks in my portfolio. Now let's take a look at the ETFs I'm holding, starting with SEHG, which is the Schwab US Growth Equity ETF. I currently own 321 shares with an average cost of $24.88 and I'm currently up close to 11% on this, and I plan to buy more at key support levels, and I'm watching are $25, $24 and $22. And the next ETF I have is SEHD, which is the Schwab US Dividend Equity ETF. I currently have 210 shares with an average price of $27.63 and I'm actually down 5% on this position, and I'm planning to buy at $26 and then at $25.50. And then I have JEPQ, which is the JP Morgan Equity Premium Income ETF. It has over 10% dividend yield and monthly payouts, which is a great bonus. I currently have 61 shares with an average price of $53.69. My next buy targets for JEPQ are 50.4 and 49.5. Moving on to AMDY, which is a yield max ETF for AMD stock. I currently hold 200 shares with an average price of $9.70. Since this is tied to AMD performance, I expect it to rebound as AMD recovers. It also offers a massive dividend yield of over 30%, and so far I've earned $258 in dividends from AMDY alone. I'm down 26%, which is around $500. However, this is a short-term hold for me, so I'm not reinvesting those dividends. I want to experiment the yield max ETFs, and hence I got into this position. And the next one is TQQQ. This is a 3x leveraged ETF for Nasdaq index. I recently sold TQQQ for about $1,000 profits, which I bought during the tariff crash, and now I bought back hoping to swing trade to make some quick bucks. Now I have 200 shares with an average price of $70.97. Since this ETF moves 3 times the Nasdaq movement, it's strictly a swing trade for me. And then I have IBIT, which is a Bitcoin Trust ETF. I currently have 8 shares with an average price of $43.62, and I'm currently up over 37% on this, and I'm waiting for it to go below its 50-day or 200-day EMA to accumulate more. I'll be watching the price levels at $55 and $49. That concludes my ETFs. Now going over to my swing trade. Bill Holdings is one of my swing trade which didn't work out for me. I'm down over 13% on this. I might buy more if it goes below $40. I was expecting it to go above $60 after their earnings, but it didn't happen. So I'm just back holding right now. And then I have 1 share of Meta with 11% profit, 1 share of Palantir with 63% profit, 1 share of TSM with 13% profit, 1 share of Uber with 25% profit, 2 shares of Shopify with 18% profit, 1 share of Hims and Hers with 137% profit. I wish I bought 100 shares of each of these in my portfolio, which would have been given me huge gains in 2025 so far. Anyways, these are all the high quality companies I'm planning to accumulate for long term. And finally, I bought $500 worth of FICO last week, and I will be buying more in the coming weeks. I made a couple of videos on FICO's business model and its price targets, so please check out in the channel. That wraps up my full portfolio breakdown and my game plan moving forward. I love to hear from you. What do you think I should add or trim? Let me know in the comments below. If you found this video helpful, please like the video and subscribe for more investing insights. Thanks for watching, and I'll see you in the next video.